If you have not liked and subscribed, please don't forget to like and subscribe. Click that bell button so that you get update about any of my new video. And also, if you want to if you want me to cover any topic you want, let me know and I'll make video on that. So today's I just wanted to talk about how the overall market is and how you can play the side market, right? So if you can see that the market is like it's going up one day a little bit, then kind of consolidating back, and it's not moving in any directions. One thing is basically election is coming up in 2 weeks, and there's a lot of uncertainty in the market, as well as people are looking for stimulus news, and seems like that's probably not going to happen before election. So many uncertainty, and also so kind of mixed guidance. And also the other thing is there's kind of worry in the market as well. So COVID numbers are increasing, and winter is coming, and as predicted it may get worse in the winter, which is kind of slowly lingering around there. So if it get worse, maybe more shutdowns coming in and whatnot, so it may not be really good for a lot of ticker. So one thing to keep in watch is if that happens, a lot of this stocks like Zoom, right? So those will get definitely benefits. So Zoom is definitely ultimate benefits. And also if you look at that, it's kind of consolidating it's making a bear flag kind of, but kind of consolidating in this area. So let's see how it does. But this will definitely benefit if the COVID case increases. A lot of people will be still stuck inside, and they will have to communicate using tool like Zoom. And other thing is let's say docu, right? So docu is also gonna benefit. So a lot of this cloudy stock will get benefit from the COVID anyway. But one thing to remember, if when there's uncertainty market, everything gets sold off, and things can go in the sideways market. So how do you play it? One of my favorite weapon to play this is iron condor, or if you want to just this spread, you can do that spread too. I just do iron condor, just it gives you more bucks for your money. So I'll kind of go about spread, but iron condor is nothing more than you just buying call credit spread and put credit spread. That's it. You have a 4 leg, right? So I'm gonna just talk about how you can play now. So one thing is always avoid earnings. You probably have seen that a lot of times, just earnings, great earnings, it's flat. Sometimes you get lucky like a snap. If you played it, it really made a good move. So really good. So that's what I was hoping for Facebook, and I got in at around 280s, but really not moving. Somehow I'm not losing a lot. It's like 4-5% only so far. So I'll maybe see today and tomorrow and day after tomorrow, and if not, I'll sell. But let's see, right? But again, Facebook, one of my favorite. I like them long term. So here, I'm not playing earnings spreads. I want kind of expired, but let's look at few, right? So docu, right? So if you go to Tastyworks and do docu, you can see that this is 4 days out. That's in the money right around 20, and around 250 to 55 is basically one delta. So one way you can do is let's select iron condor. Yep. So this is the total credit, but always don't send it just how it is. I've seen some people just send it whatever it shows, and they're already in the money. You want to make sure, right, you are far away. The goal is you don't want a stock to reach this prices. You want both your debit, I mean your call and put, both expire worthless. So remember, you want them away. So for a call, you don't want, stock is right now at 221. You don't want it to reach whatever the price is, 222, too near. It can reach it any day, right? So what you can do is just move it around. So I like it, I want to be safe, so I'm gonna do, let's say 55, 50, pretty further away. And if you see that it did hit if you even technical points, so it did hit about 44, 45. Did not hit 50 in the recent. It did hit before 83, but uh, with this uncertainty, very unlikely to hit. It can hit, there's always risk, but just let's assume that's pretty good resistance, so it may kind of die down in around 47, right? And we don't have it just a week, 4 days, so one day is already gone. So let's go. So 50, 55, right? So you will get about $5, $6, $7 in credit. Not much, a little bit smaller, but yeah. And other is put also. If you look at kind of, I would think there's good support around, you know, 200 205 area, so maybe we can do that. So always, these are my idea, not saying like you buy exactly that, but just some ideas, right? So if you get 200 and 205, a little near. So if you want to be more conservative, you can go 95 and 200 as well, so you get less credit. But if you get 205 and 200, you get, so here in this case you are getting $37 in credit. Your total risk is the width of the spread, so 500, you got this credit, so 500 minus 37, so 463, right? So basically your idea is you don't care, the stock can move anywhere. So if the stock is between 205 and 250, you win basically, right? So if it's a stock between 205 and 250 by expiration, which is 30th October, you collect this 37, and your if it's a collateral, that will be released. So that's it, you just won. So again, not a lot of money, but slowly and steady. It's just the one contract. You can always buy two, three, four contract, but pretty slow and consistent. And if you look at the percentage wise, how much percentage it is, 37 by 500 is about 7%. That's pretty high. You're gonna be a little bit conservative. So that's 20 by 500, that's 4%. I like it, that's pretty good, right? So that's $20, but 4%, so chances are pretty high. So your probability of profit is about 92%. So you can always close it. So if it's like, let's say tomorrow it goes to 5 or 10, you can just buy it for $5 or $10 and close it out. You are done with it, right? uh, Always the one thing is you do pay about $4 or $5 in commission, so that's the one bad part. But yeah, you can win them all and win everywhere, right? So this is one strategy you can play. So pick a ticker, like play around. One thing is always don't put all the money in one ticker, just play spread around different tickers, maybe look around. Other thing is we can look in the put on, right? So if you look at this and iron condor, go, and where we are around 18. So if I do, I hope they don't have earnings. If it's earnings, probably don't want to play. But if you do 105 110, it's around 88. We gotta maybe this one. That's pretty good. Probability is 71, so you want to make sure at least 80. I like it, 80. Yeah, at least 80 will be really good. So 40 45, that's 79, and we can maybe move it to, that's not bad, right? $31 on 500, so that's pretty good. That's, and let's make it 5. Yep, this is 90%. 110, you collect $31, so it's not a bad trade, right? You're putting 500 in a collateral. Again, you put some money, but the chance of winning is really high, almost 90%, right? Very less chance of losing. So always, so this is one of the strategy, like, and which is really good. So when the market is red, there's some volatility, so you get some good premiums, but make sure you are not playing these are just the example, and make sure you are not playing for the earnings. So earnings can have a very big swings, and a lot of times what I do is I will lower this legs. Let's say I want to buy put on, right? I don't want to buy, so I will take it a risk. So it's okay if I want to buy, let's say 100 shares, so each dollar drop, basically I'm getting $100 cheaper. So 5 here, I'm risking just 500 only, right? So let's say it's 18, so if it's $10, 108, that's $10. If I'm buying like a 100 share, that's $1,000, right? 100 times 10, $1,000. So I'm risking 5, but I can kind of take a risk here since I want to buy it, right? So you can play that way too. But this is one of the strategy I use in this kind of market, so you can always do that. Yeah, that's it for today, and if you have any question or comment, let me know. Thanks.